independence. But just how did the situation get this bad? There has been economic mismanagement by successive governments, which created a twin deficit, which indicates its national expenditure exceeds its national income and the country does not produce enough tradable goods and services. But the situation got worse due to a range of factors. In November 2019, Gotabaya Rajapaksa announced sweeping tax cuts before the parliamentary election in a few months. And in April 2021, there was the government's push for organic farming, which hit the farm output. On top of all this, the pandemic severely hit the other sources of income, like the tourism sector and the foreign workers' remittances. The credit rating agencies had downgraded Sri Lanka, locking it out of the international capital markets on which it relied to pay its debt obligations. So it started using its foreign reserves for that, which meant there wasn't enough foreign currency to pay for the essential imports, which resulted in the shortages on the ground.
So whether one is able to tolerate Wayan's overweening style or not, the subject was covered very quickly and in fact in 1 minute. Now, Sri Lanka is not alone. Several emerging markets have either recently restructured their sovereign debt, like Ecuador, Argentina, or remain in default, like Suriname, Lebanon, and Venezuela. Countries like Chad, Ethiopia, and Somalia are also currently in debt distress, we know. So sovereign borrowing has grown from a small group made up of multilateral organizations and a few high-power MNC commercial banks and funds like the Paris Club of rich countries to become something much more complex and demanding and even ruthless at this present time. So many developing economies have in the past decade or so borrowed ridiculously more from international bond markets and tapped non-Paris Club lenders like China and Russia to fund various government programs. And some of those of no value to the taxpayers, simply because it was easy to get. That's the reason. So this is now also a banking crisis, and it has also become a cash flow issue. So what can be done? This webinar is not about apportioning blame as regards the past. Even though there are several impediments that sour the process forward for and concerning Sri Lanka, like a constitutional issue, then the political posturing and lack of cohesion in governance, as well as a deeply dismayed population unwilling to compromise in any way and quite angered at the impact to life and livelihood. So this is tricky, to say the least. And this webinar is about options, not blame, options. So we have expert speakers, and later there will be a conversation that will be conducted with a panel, and we trust that you will find this program of great use to yourselves. Now, we need several parallel tracks that need to run, foreign as well as local creditors, and there's also a political track which has to be dealt with, and the bilateral and multilateral debt also requires certain approaches. We are very happy to have with us, with a particular focus now on a wider platform, not just with regard to Sri Lanka, but on the subject of sovereign debt. We have Professor Ulrich Volz, who is the director of the Center for Sustainable Finance and professor of economics at the University of London. So for the next 10 minutes or so, we are very happy to invite your attention as Professor Ulrich Volz addresses this audience. Ulrich.
Many thanks for the kind introduction and the invitation to speak at this important event. It pains me to see the country that I was born in and where I lived the first years of my life descend into an economic crisis that is spiraling into a humanitarian emergency, with many families and children going hungry and people facing severe energy shortages. It's of utmost importance that the debt crisis in Sri Lanka is resolved swiftly, which is of course easier said than done. And the way Sri Lanka's sovereign debt crisis is addressed does not only matter for the people of Sri Lanka, it also matters greatly for a larger number of developing and emerging economies that are facing severe debt distress. So Sri Lanka in many ways is a canary in the coal mine. According to the IMF, 60% of low-income countries are at high risk or already in debt distress. But moreover, a very large number of middle-income countries is also suffering from high debt service burdens. And debt to GDP ratios and external debt service as share of government revenue, which had been already on the rise prior to the COVID crisis, have further increased very considerably in the many countries since the start of the pandemic. There are even some estimates that suggest that 135 countries in the global south are critically indebted. So while this event is very much focusing on Sri Lanka, it is not only a problem that Sri Lanka is facing. Around a quarter of emerging market governments that have issued debt in foreign currency have their bonds trading in distressed territory, that is with spreads more than 1,000 basis points above US treasuries. And the monetary tightening in the US and many other advanced countries is now driving up the cost of debt and makes international refinancing ever harder for those countries that still maintain access to international capital markets. And of course, now the brutal invasion of Russia, Ukraine has further escalated the situation, creating a perfect storm. This war has really sent shockwaves now through the global economy and caused the largest commodity shock since the 1970s. And whereas a few oil, gas, and grain exporters may get some temporary relief in the short term, indeed, the vast majority of developing and emerging market countries are net fossil fuel and grain importers. And with world food prices at record high, UN Secretary General Guterres has warned of a hurricane of hunger. And indeed, I don't think I need to tell anyone how bad the situation is also in Sri Lanka. So the effects of the war in Ukraine are very likely to significantly worsen the social and economic situation in many, many developing and emerging countries and further undermine debt sustainability. And indeed, in many low and middle income countries, external debt service has been greater than healthcare expenditure and education expenditure combined. And the further problem is that, of course, this was supposed to be the decade of action, where countries around the world were supposed to undertake significant investment in the Sustainable Development Goals and also in climate action, and none of that is really happening. And unfortunately, we have to recognize that the approach taken by the G20 to address this looming debt crisis in the global south has fallen short very considerably. The G20 put forward a debt service suspension initiative, which has ended in December last year, but that provided only a mere $13 billion in temporary relief for 48 low-income countries. But importantly, private creditors who hold the biggest share of developing country debt did not participate at all in this. And also, this was only a suspension of debt payments. All the debt has to be repaid with both interest and amortization payments after 5 years. The G20 put also forward a common framework for debt treatment that was established for the same 73 countries that were eligible for this debt suspension initiative. But again, this also excludes middle-income countries, and very importantly, it lacks incentives and mechanisms to bring debtor governments and private creditors together. And as mentioned in the introduction, three countries, Chad, Ethiopia, and Zambia, have sought relief through this common framework, but each of these cases has experienced very significant delays, which is very much sending a negative signal to other countries seeking debt relief, because the message is that if you apply for debt relief, you're going to be in a very long and painful process where nothing really advances. So clearly, a new approach to tackling debt crisis is urgently needed that will facilitate a timely and orderly restructuring and also provide a clear pathway for debtor governments to green and inclusive recoveries. And given that private creditors hold a majority of public external debt of developing countries, private sector involvement is crucial, and this has been lacking to date. And this is also critical in Sri Lanka's case. As of October 2021, almost 60% of Sri Lanka's total foreign debt of around $35 billion was owed to financial markets, including around 8% of the total debt that are owed to the Export-Import Bank of China. And a third of Sri Lanka's foreign debt is owed to international sovereign bondholders. So when we talk about debt restructuring in Sri Lanka and also elsewhere in most other developing emerging economies, we need to talk about how to bring private creditors to the negotiation table. And for this, the carrots and sticks approach is needed. That is a combination of positive incentives, so carrots, but as well pressure, sticks. And with colleagues, I've put forward a proposal for debt relief for a green and inclusive recovery that combines both carrots and sticks. In terms of incentives, we propose the creation of a new facility for green and inclusive recovery that could be administered by the World Bank. And this facility is designed to entice the commercial sector to engage in debt restructurings. The facility could be established fairly quickly, and it would back the payments of newly issued sovereign bonds that would be swapped with a significant haircut for old and unsustainable privately held debt. And the private creditors would benefit from a partial guarantee of the principal as well as a part of the interest payment, analogous to the Brady Plan that helped to overcome the stalemate of debt crisis in the 1980s. In terms of pressure, clearly the financial authorities of the jurisdictions in which the major private creditors, that is both banks and asset managers, reside and that govern the majority of sovereign debt contracts, and that is mostly the US, the UK, and also China, they would have to use strong moral suasion and indeed regulation on accounting, banking supervision, and taxation to improve the creditors' willingness to participate in debt restructuring. So we need absolutely the major economic powers to put pressure on their financial institutions to engage in debt restructuring. And of course, there has been a lot of discussion around China, and China really has to step up. But it's not only China, also the UK and the US need to step forward because they are governing the debt contracts of most of the sovereign bonds involved. Importantly, debt relief should not only provide temporary breathing space, it should really empower governments to lay the foundations for sustainable development by investing in strategic areas of development, including health, education, digitization, cheap and sustainable energy, and also very, very importantly, climate resilient infrastructure. And so as part of our proposal, debtor countries would commit to reforms that align their policies and budgets with the Agenda 2030 and the Paris Agreement. So the countries would commit to such reforms, which would also make it easier for bilateral donors to agree to these debt restructurings, because they also want to see some positive developmental and also climate action. Importantly, the country commitments would have to be designed by the country governments under involvement of the parliaments and in consultation with relevant stakeholders. So let me come to an end. Sri Lanka is facing an incredibly difficult moment, and without significant and speedy debt restructuring involving private and public creditors, the country will not get back on its feet. But as I said, it's not only Sri Lanka. The way this crisis will be handled and the way China and other major international players will engage will not only have a great relevance for the 22 million people living in Sri Lanka, it will also have an important signaling effect to countries around the world and to the financial sector. And we need to make sure that the people of Sri Lanka and also elsewhere will get an opportunity to really restart anew, to get a significant debt restructuring in a very speedy way, so that efforts can concentrate on rebuilding the country and indeed other countries and bring about green and inclusive recoveries. With this, let me end, and thank you very much for having me.
Thank you too, Professor Ulrich Volz. Now, the R word comes in, reforms. This has been spoken about, and obviously there has to be that done. That's vital. And we were able to appreciate that even at the level of organizations or arrangements such as the G20, there has been what has been referred to as a debt service initiative, but that may not be accessible in the same way that it might have been at another time. And it was also interesting to hear the word that there must be willingness on the part of creditors, and that's a matter of persuasion, and hopefully that is something that will obviously be addressed by the authorities that are involved. So thank you very much. And it was also a very pleasant surprise to have learned from you only now that you in fact spent the early part of your life here in this country, on this island. I didn't know that. None of us seem to have known that. Which moves us now to the next of our speakers. And he is currently based in Singapore, and that's Dr. Manoj Jain. And he has and controls or manages a $1 trillion fund as the managing partner of Hector Capital Partners, as I said, based in Singapore. And he knows Asia very well. This particular focus that will be brought by Dr. Jain is markets. Over to you, Manoj.
Thank you very much for your kind introduction. I'll just start off saying I do not manage $1 trillion. Whosoever has said this to you, I appreciate your speaking very highly of me. So I'm going to be, as a former consultant, start with a slide. So thank you, Professor Volz, for your opening comments, and Mr. Bandar Naike, thank you for inviting me and letting me speak. So I am not here as an economist. I'll be speaking on behalf of those private investors who might be listening and participating in this conversation. So this is what I'll start with. The context is, we know that the situation is tough. It's the first default, and as I've been reading about this, the situation is mostly difficult. It's going through a very difficult part in Sri Lankan history. It's sad, and as Professor Volz said, that when you hear and read about the hunger, the petrol crisis, and other happening, it makes us all as fellow human beings very uncomfortable. So sorry that Sri Lanka is in this state. I hope better things will come in the near future. However, not only the situation is tough, there is a very the complication that's emerging is that you don't have much time on hand. And the reason is because, unfortunately, we the humans feel hungry every day. We need to travel, we need energy, we need our factories to run every day, otherwise they rust. So these are complications that emerge. So it's not something that we can postpone for a few weeks, few months, because they're further going to cause the situation to be tougher. Not only that, the other essentials are complications is, of course, I'm not here to speak about politics and political situations. I don't know enough. However, politics does make things very complicated in general. And when economics and politics mix, the solution is not easy to solve. So then how, very Singaporean way of saying, where is the resolution in all this? It's a test of wills. How do we avert the crisis? And for that, the money required is now. And not only now, over longer term, so that it should never repeat. Such a crisis should never happen par jamais. It should be building the creditor confidence over long term. So I'll start with very small, it's like a preparation for usual suspect answers. So debt is your obligation to pay. And unfortunately, there is a walk away from your obligation. What does that mean? You need people who will come as rescuers, multilaterals, but before that, you'll have to do some urgency management. You'll have to build a competent team and look for the strategic interests of various parties of multilaterals who are never going to come without their own interest. You've got to be very carefully chalking it out, managing it, and whatnot. The second very important thing is who's going to help build confidence in the investors. So what are the macroeconomic decisions going to be taken? How high is your willpower, the resolve, and how soon? Because the people who are going to come, they would want the confidence that yes, they're not going to lose their capital. The third important thing is information sharing. How well managed are your information related to the sources and uses of funds? And also very good clarity, what you must do, what you cannot do, because that's what the investors will push. And then finally, this is where my role as an investor, private investor, comes in continuation to Professor Volz's statement that if you would want success, not only public investors, not only multilaterals, but along with that, private investors should come. And this is one of the things that will be brought to the table, because as I mentioned earlier, the situation is dire and timing is less. So it may involve some asset sale. I'm not talking about privatization because privatization is a longer term process. So unfortunately, what does that mean? How real are the assets? What's the discount being offered? Who are the usual suspect players? Players like us, when we come to the table, what does that mean? And how do you create that? And this is my view. What do I as an investor want? My objective is very clear. I want attractive risk-adjusted returns. My role is to look for diversification. I'm very averse to capital loss, and I want certainty of income. How do you bring me to the table? And not just me, but many very much more competent players as private investors who would want to participate in the recovery for Sri Lanka. And the answer is the questions that are very critical: availability of information, how attractive are the assets, and how can I get information? What are the macroprudential factors available to me so that I'm not nervous? And finally, if I come to the table, there is no shortcut to my investors process. Whether I come in to buy certain assets, equity interest in those projects, or I come to support the bonds, there should be a usual suspect list of investors like us built who should have interest in the sectors that are being offered to be sold. These these sector experts should have a mandate and risk appetite to participate in certain asset purchases. You have to make sure the price being offered is discounted. Unfortunately, I did not write those rules, but whenever the sale is done to avert a crisis, there's got to be adequate discount to keep the investors make decisions in short term. Also, another thing, as I said, the complicating factor, the third point here is the current status of the assets that I'll be interested in, whether they're functional or they're closed. Because if an asset, a manufacturing or certain things that are non-functional, that means my initial capital outlay will go up, which means that I would offer my risk premium would go up. I have to go through my investment committee approval, term sheet negotiations, legal due diligence, and whatnot. And then my purchase will go through. The reason I'm stating a very obvious process to most people, I'm sure, who are aware of this, so that you understand that if you were to bring someone, you were to bring in, private investors, you got to be looking through an entire process for private investors, because their interest is risk-adjusted returns. I'll also say very quickly, I'm about to end my presentation here, that Professor Volz said a very important thing, that lots of countries go through this. While that is true, however, the problem and situation is here and now for Sri Lanka. So a long time ago, I was caught by a police, the traffic police, because I was driving very fast. And I said to the police person that everyone is driving fast, I should be let go. And the police person said, no, he caught me. So Sri Lanka's situation is here and now. It is as unfortunate as it can be. So while there are multilaterals, IMFs coming, the private investors' interest of risk-adjusted returns can be created. It has been thought about in existing asset sale, also in creating new projects. There is a lot of sustainable development that has been set up in the world. There's enormous amount of money, the funds that are allocated to these sustainable development. If the projects are very well curated, they can come. Sri Lanka is extremely strategic located. It's in the neighborhood of a very large economy that makes it even more attractive. So once these projects are well curated, they could come to Sri Lanka in short term. When they come, they create liquidity and start solving the problem and start creating long-term confidence in the creditors, in the investors. So with this, I rest my case. I would be very keen in participating should I know what are the opportunities we have as private investors. Thank you very much for listening to me.
Thank you very much, Dr. Manoj Jain. We certainly appreciate that in the midst of so much that is negative, there are also elements that are there to remain somewhat positive. So your illustration and the points made were very good. We also appreciate that there has to be an obligation, or there is rather, an obligation to pay, not just a willingness, but an obligation. But while we're doing that, then you were keen to remind us that there is no shortcut to investors coming in, because there is a great deal of work that obviously needs to be in place to build confidence. So building confidence, there seems to be no shortcut. And I also was able to pick up the point that communication has to be first rate. There has to be clear communication. So that's also one of those responsibilities that rests upon those that are undertaking this whole restructuring matter. And now to the next of our speakers. Now, I must mention that this has had to be pre-recorded. So what was recorded is what we're going to be able to play back and enjoy a conversation. This has been recorded in the manner of a conversation. So it's Dinesh Weerakkody who will be facilitating that conversation, or has facilitated that conversation with Professor Lee Buchheit. Now, he is referred to and is known as a sovereign debt restructure specialist. And he has been in the business for 43 years. So it's a long career. And his particular focus and range of expertise is in the legal arena. And Professor Buchheit has led the international legal teams advising the Hellenic Republic, you can say Greece, and the Republic of Iraq, 2005, 2008, and was involved in their debt restructurings, and they're counted as the two largest sovereign debt workouts in history. So it is not for nothing that he is called the fairy godmother to finance ministers in distress. That's a term that has been used, not by me, but by some journals, like The Guardian, for instance. And also is understood to be the go-to expert for debt-ridden nations. So as I said, he speaks, that's Professor Lee Buchheit speaks, and then thereafter we'll engage in a conversation with Dinesh Weerakkody. So do listen up.
Ladies and gentlemen, good evening. It's a great pleasure to be with you. I have been asked to introduce the subject of the debt restructuring that Sri Lanka will be undertaking over the next few months. I believe that historians will look back on this time and conclude that Sri Lanka was the first major sovereign debt restructuring undertaken in the post-COVID era. It will be undertaken in an environment of global financial distress. Sovereign debt stocks around the world are at historically high levels. Interest rates are rising. The major central banks of the world are weaning themselves from their quantitative easing programs that have injected massive amounts of liquidity into the markets over the last few years. In addition, we see precipitous rises in commodity prices and shocks to the tourism industry. The principal challenge that Sri Lanka will face in conducting this debt restructuring in this difficult environment will be to coordinate the various creditor groups and to coordinate the individual creditors within those groups. There are 4 major creditor groups that will be involved here. First are the bondholders. Second, the traditional government creditors, so-called bilateral creditors. These are the OECD countries that since 1956 have renegotiated their loans to emerging market sovereign borrowers jointly under the auspices of the French Treasury, and that group of creditors is called the Paris Club. The largest Paris Club lender to Sri Lanka is Japan. Quite apart from traditional Paris Club lenders are non-Paris Club bilateral creditors, the largest of which is now China. But this group would include India, for example. And finally, there are the multilateral lenders, the IMF, the World Bank, the Asian Development Bank, and so forth. The multilateral lenders, let's put aside for a moment. They enjoy nearly universal acceptance, preferred creditor status, meaning that their loans would not be subject to any debt treatment. They will, however, be expected to be net new lenders to Sri Lanka during the process. But the other 3, the bondholders, the Paris Club, and the non-Paris Club bilateral creditors, exist in a kind of Hobbesian state of nature, which is to say that any settlement of the debts owed to one of those groups that is preferential to the settlements with the others will probably proportionally disadvantage the other. So they view each other with a degree of suspicion. I suspect each of them secretly hopes that they can negotiate a preferential settlement of their exposure, but in public, each of them will embrace the principle of intercreditor equity, by which they mean that the terms of debt relief agreed by any one group ought to be comparable to that asked from the other groups, not necessarily in how it is implemented, but at least in a net present value effects on the debt stock. As I said a moment ago, the challenge will be how to coordinate those groups. In November of 2020, in the middle of the COVID pandemic, the G20 countries announced a new initiative. They called it the Common Framework. For the first time, the Common Framework contemplated that Paris Club bilateral creditors and non-Paris Club bilateral creditors, principally China, would sit at the same negotiating table and would renegotiate their claims against the poorest countries jointly. There were 73 countries eligible for the Common Framework. Sri Lanka is not one of them. Sri Lanka is not classified as a low-income country for this purpose. That said, I cannot see any policy reason why a common framework approach to the bilateral debt stock might not be possible here. By that I mean to create an ad hoc joint bilateral creditors committee in which the traditional Paris Club creditors would sit, as well as China and India and any other non-Paris Club bilateral creditors. You will ask, how quickly can all of this be done? The answer will turn to a very large extent on the IMF's assessment of what is needed to return Sri Lanka to a sustainable debt position. The IMF is working on that assessment now, and until we see it, it will be difficult to predict the timing of this for obvious reasons. The deeper the debt relief that the sovereign must request from its creditors, the longer it typically takes to persuade those creditors that that is something that they should participate in. On the bondholders' side, there is some good news. Sri Lanka has borrowed its international bonds using a trust structure, and that will centralize enforcement in a trustee for any bond that has not matured. And those bonds have collective action clauses. In summary, there are significant challenges facing the Sri Lankan government, but there is every reason to believe that this operation can be conducted in a satisfactory way to return Sri Lanka to a sustainable debt position. The government has identified very able and experienced advisors, and everyone involved in the process is perfectly aware of the need to alleviate the hardships that the Sri Lankan citizens are currently facing.
Thank you, Professor Lee. Based on your wide experience, what are the do's and don'ts for Sri Lanka in this exercise?
A principal do is what is being called transparency, which is to say that each of these creditor groups, if they're being asked to give debt relief, have a right to know the terms of the loans of the other creditor groups and the treatment that they'll be given to them. The challenge here, Dinesh, is that China has in the past shown a predilection for bespoke sovereign debt restructurings, and they have been reluctant to release the terms of those settlements. That only fuels what I described a moment ago as the suspicion of other creditor groups. This will be a principal due for the Sri Lankan authorities. On the don't side, the mistake I have seen governments make most often is to try to turn the external debt restructuring into domestic political advantage. So one demonizes the foreign creditors and tries to extract a political advantage. That, frankly, is all atmospherics and rarely helps.
Professor Lee, how should the pain of the restructuring be shared?
I would like to say equally. This, Dinesh, is going to be one of the things that the IMF must assess. All sovereign debt restructurings in the end come down to a simple burden sharing decision. How much of the pain of the economic adjustment is to be borne by the citizens in the form of what the economists call fiscal adjustment. You and I would call it increased taxes and reduced pensions and so forth. And how much is to be borne by the creditors in the form of debt relief. And that is not simply an arithmetic decision. It must take into account social, political, frankly, at the margin, even moral issues as to how much burden can be placed upon the citizens in this. But the safest approach, Dinesh, would be to say that among the creditor groups, a comparable contribution will be sought from each.
Professor, in your view, what type of debt sustainability plan would fly with China and the IMF?
Well, the IMF is the organization that in the first instance will do the so-called debt sustainability analysis. They will try to determine what package of fiscal adjustment and debt relief would return Sri Lanka in a reasonable period of time to a position in which it has a sustainable debt profile and can re-access the private capital markets. That's not really my area of expertise, so I won't speculate about what it might look like. But everyone will be looking to the IMF for that basic assessment. Once they give it, then the debt restructurers can begin their work to implement a program that will achieve those objectives on the debt relief side.
Okay. Any specific advice to the President and Prime Minister and the politicians involved in this exercise?
My advice would be stay the course. Every country at this stage of the process is looking down a pretty dark tunnel, but countries do get through them. And if a debt restructuring can be handled in a professional way, its temporal scope will be limited, and the damage that it will inflict on the country's economy, on its credit reputation, and on its citizens can be minimized. Look, Dinesh, all sovereign debt restructurings are always and everywhere painful. I won't sugarcoat that for you. It is not a pleasant undertaking, but it can be gotten through. And on the other side, the country can return to a position of normalcy, and that is the objective. So I would tell the government, don't give up hope. It is a difficult and disagreeable process, but there is light on the other side.
Thank you. And my final question to you is, why does the media call you the fairy godmother to finance ministers in distress?
I never thought that phrase fairy godmother quite sent the message that I wanted to send. No, I have done this work for 40 years in more than 24 countries. I have retired from the practice of law, but I now try to help wherever I can on a pro bono basis to use what experience and knowledge I have garnered over those 4 decades to help. So I think my fairy godmother status might be explained by that.
Okay. Thank you, Professor Lee. It was great talking to you and look forward to engaging with you in the future as well.
Indeed. Good to see you. Thank you.
And as he was wont to mention, the situation is pretty dire, but not to the point where no recovery can be expected. But there is obviously a lot that needs to be done. There was an interesting phrase, interesting to me, that is, that there is a concept such as burden sharing, and that it is possible to be able to bring the creditors in line with the actual solution to the problem being faced by the population and the people of this country. So the fact that there is a possibility of not just mere restructuring in a reasonable amount of time, but also receiving the support of the creditors with what we refer to as the burden sharing. So let's look for some better times ahead. And certainly we would now be moving into what is referred to as the panel discussion. We shall do that immediately after we have a message from our sponsor for our special event today, and that's First Capital. So this is their message.
The world is speeding up, and Sri Lanka is progressing with it. Succeeding in this time requires innovative strategies and a performance-driven mindset. For over 35 years, First Capital has put performance first in everything we do. We have optimized every aspect of our operation to deliver the highest performance and results to our stakeholders. As we march into the future, we are committing to elevating our services even further, moving forward with what we believe in to provide you with a premium service, delivering on our promises, finding the best solutions for our clients, going above and beyond to deliver value, and upholding the highest levels of professionalism. Rest assured, every step of the way, we will deliver performance first in everything we do. First Capital, performance first, always.
Deeply grateful once again to First Capital for stepping in and sponsoring our special event, which we now shift gears and engage with our panelists. And I'm very happy to introduce them one by one by name. We have an investor and insurance industry specialist from India, Mr. R. Ramakrishna. We also have a former CEO of HNB, that's the Hatton National Bank, and NDB Bank, and a past president of the Ceylon Chamber of Commerce, Mr. Rajendra Theagaraja. We also have the former State Minister of Finance, and also formerly himself a CEO of NDB Bank, Sri Lanka, and currently in Parliament as a Member of Parliament, Mr. Eran Wickramarathne. And we have Yoshino Naoyuki, who is the Emeritus Professor at Keio University, and also Dean and CEO of the Asian Development Bank Institute. So he has an academic background, we might say, and that's our panel. And for the next hour or so, we will be inviting the chief editor of the DailyFT, Mr. Nisthar Cassim, to engage with those I have just named in the panel, to engage with them in conversation. And if we do have some of our speakers still with us, maybe they too will be brought into the scheme of things. Yes, so over to you, Nisthar.
Thank you very much, Arun. Thank you very much for all the previous keynote speakers. What I'll do is I'd like to invite Professor Naoyuki as well as Ramakrishna to make their opening remarks in relation to the theme, what options Sri Lanka has
I said there.
So, and then I'll move on to some direct questions to two of our local panelists, Rajendra and MP Eran Wickramarathne. So, Professor Naoyuki, can you make your opening remarks? Professor, can you hear us? Professor Naoyuki, can you make your opening remarks?
Can I?
Yes, please do.
Okay, sorry. I thought it was very impossible. Okay. First, Japan is the highest debted country in the world, and Greece is the second. So when the Greece went into bankrupt, many Europeans invited me to Europe. Why Japan is still sustained and Greece went into bankrupt? Largest reason why Japan is still sustained is domestic savers are holding Japanese government bonds. In case of Greece, 2/3 of their borrowing came from overseas. So I think that domestic holdings of government bonds are very important. That is one. Secondly, Japan has issued national balance sheet. And national balance sheet, Japan has huge assets, mountains, rivers, and everything. So we created the balance of the government budget. Then everybody trusted Japan is rich because all the mountains and so on, those are the government assets. Okay, so I think that Sri Lanka is very important to create government assets, budget, okay, asset balance sheet, so that the trust will be gained because government has huge assets and your current debt is much smaller than those assets. And then that will give the confidence for private investors. Thirdly, debt restructuring is a temporary issue. And if you borrow money from abroad, the interest rates are very high. So it is very important to ask multilateral institutions, such as IMF or ADB, will borrow money from the market and bring it to Sri Lanka. However, Sri Lanka has to promise in 10 or 20 years, you will return those money. Okay? So it's a borrowing and for the temporary. And last one is 10-year planning is very important to create confidence from the market. What kind of spending will be made, including infrastructure and education and so on. Then that budget, balance sheet, revenues, expenses, those 10-year plan will be very important to gain confidence from private investors. So those are my initial remarks. Thank you very much.
Thank you, Professor, for putting in context some interesting points. I'm sure we can expand on that during the panel discussion. Mr. Ramakrishnan, please, your opening remarks, please. Yeah.
Good evening. Thanks, everyone. See, being an investor in the Sri Lankan market for over the last 10, 12 years, we find the environment is very good for doing business in Sri Lanka. There's a lot of talent pool available in Sri Lanka. So while I'm not an expert on giving ideas for debt restructuring, while that is one aspect of it, the long-term well-being of the economy is if you can attract foreign investment, which is a long-term investment into the economy, which will create jobs, which will create more wealth for the entire nation. So that is a strategy which should be pursued more aggressively. How can more investment be attracted to Sri Lanka? As I said, there's a lot of talent available in the country in terms of manpower. The country should move from manufacturing, yes, could be strengthened, but service economies are the ones which are bringing in a lot more traction to various economy. Even for the country where, for example, in India also, It's been the service sector which has really helped India come out of the similar challenges that Lanka has today. So the emphasis should be on the service sector growth. So a couple of ideas could be that the government could explore creating a free economic zones, etc., where a lot of service industries could be set up and even manufacturing units could come up. That will bring in long-term foreign exchange inflows into the country rather than just a debt restructuring. The one other aspect, I'm not an economics guy, but the exchange rate, which was left for open market forces in Sri Lanka, I think may be not the right thing. There should be some degree of control on the exchange rate because open trading leads to a lot of speculation. Most of the times it is possible that the speculators could hijack the exchange rates, etc. So if some degree of control on the exchange rates could be brought about, that could bring in some stability into the country. And the last thing that I would suggest from my perspective is there are a lot of expat Sri Lankans who are outside Lanka working, doing business, and the significant diaspora is there. If there could be some sovereign bonds which could be floated on a long-term basis, some concessions could be given, and maybe the interest could be given in Lankan rupees in Lanka, that could also spur some foreign inflows, etc., which could aid the government and give some breathing space while it works out the debt restructuring with the multilateral agencies or with the other creditors. These are my remarks. Thank you.
Okay, thank you very much. Interesting thoughts. Eran, I'd like to move on to you. A key point in this discussion is how to pay on the people. And you being an ex-banker and a politician, I'd like you to sort of put it in context, what should be avoided and how could government reduce the pain in this on the people when it comes to debt restructuring. Eran, are you there?
Thank you for inviting.
Okay. Okay.
Yes, so we are, as you know, facing a huge problem with the inability to service the debt, but also we are facing a crunch in terms of the day-to-day living of the people because we have very high import content in our standard of living from electricity, which a fair percentage is thermal, and then the petrol, the diesel, the gas, the essential medicines, and so forth. So people are actually under pressure. So we have to restructure the debt, and we will also in the process of trying to come to some arrangement with the IMF, trying to get a staff level agreement, if possible, within weeks. And then that will need us to make reforms, and those reforms will be fiscal reforms, which also will impact people. So the real question is going to be, is how are we going to balance the reforms while we are also going to do the debt restructure?
Thank you. Thanks, Eran. Thank you. I'll move on to Rajendra. A quick snapshot from you in terms of what are the real implications for the financial sector, given the ongoing efforts to restructure the, I know we are yet to start the process. I mean, there is preliminary work is going on, but what are your initial history?
Can you hear me? So maybe two or three points. First of all, if we look at the banking sector as a whole, I think approximately 39 or 40% of the sector assets as at end of December last year was represented by state-owned enterprise debt and or government debt. right? That's the bottom line, truth, right? So I think when that happens, that naturally does two things. Of that 39%, I think approximately 9% was SOE and the balance was G6. So when banks tend to invest liquidity into government securities, they tend to take, unfortunately, a safe approach because it's giving them good returns. And the inclination to support real economic activity becomes a second priority, point one. And also in that process, the ability to take measured risk also becomes a question. So that's the negative side of holding on to that amount of debt on one side. Then on the other side, when you have approximately 10% of the system's balance sheet with government debt, in this sort of a situation when there is challenge, invariably this debt tends to be rolled over, as opposed to because there is a challenge in trying to repay. Whereas if the same debt was held by the private sector, these would be marked to market and the pain would be felt by investors, right? So as a result of that, there is also a further constriction in terms of the liquidity in the system to try to support the economy. So one way of trying to avoid this situation, I think while Eran mentioned about maybe some of the challenges the citizens may have to avoid bearing, is this restructuring a loan and leaving because we are also currently having a very little fiscal space to manage this. Unless you start to print money, and printing money, already we are sitting on near hyperinflation. So one solution which the team should look at is whether there is merit in looking at taking some of those government securities and debt out of the system through what people like Korea and some of the other markets like Slovenia and Spain did a few years ago in creating the asset management corporation concept. I think the frameworks are available very clearly. And if the AMC could issue new debt, which can then invest in these instruments, I think it will certainly create much near liquidity. And now that we are agreeing and entered into a conversation with the IMF, I'm sure the eventual restructuring discussions with IMF will not only involve with IMF. I'm sure the likes of World Bank and the ADB and other institutions will participate and do their part in this whole process. And some of these, especially the likes of ADB, do have the capacity to advise the government in setting up things like an AMC corporation and even providing much needed credit enhancement into that tool to do what I just said. Because I think to manage, keep inflation at a certain level, I think one needs to also try to take the toxicity out of the system. So, Nisthar, that's my main comment I would make regarding the system as of today. I'm not going to talk too much about the moratoriums which have just come out. Time will tell whether the borrowers, the almost I think 700 or 800 billion of debt, Rupee debt from the 2 or 3 sectors will be able to actually service now that they have come out of the cover behind the moratorium. Time will tell, but that itself may also add some additional pressure on the system.
Okay, thank you. Thank you very much for initial remarks as well. Professor Ulrich, I'd like to go back to your presentation. Professor Ulrich. Okay. Professor, thank you very much for coming back. You mentioned about carrot and stick approach. In your view, you were suggesting that Sri Lanka could start that process. I wanted to sort of expand why is it that private creditors might be difficult to manage in a debt restructuring process, and what would be their usual demands, and how could Sri Lanka respond to it?
Yeah. So my point about carrot and sticks is that private creditors need to be convinced that it's better for them to participate in a debt restructuring than to abstain. Yeah, so that's the critical point. And so the incentive structure needs to be right. And in terms of incentives, we have positive incentives and negative incentives. And so what we've seen over the last 2 years, when the debt crisis in the global south has been brewing, and Sri Lanka is certainly kind of hit particularly hard now, and there are a lot of other factors besides the COVID crisis and also now the Ukraine crisis that have contributed to this. But as was said in the beginning, we're not going to look now into the root causes, but it's very clear that Sri Lanka does need a debt restructuring. And as I mentioned also in my talk, and it has been highlighted by Professor Buchheit, a private debt actually does make a majority of Sri Lanka's debt. So getting the private creditors to the table is absolutely critical. Of course, in the case of Sri Lanka, one issue that's also very, very critical is that part of the private creditors are Chinese state-owned banks, with making them, not entirely private, but that's a matter of definition. But the matter of fact, we need to get them all on the table, to the table. And so we have looked at historical debt restructurings, what has worked, what hasn't worked. The factor that is absolutely critical is, of course, that we need to try to get these arrangements negotiated quickly. Kind of having a long, drawn-out process where nothing moves is incredibly costly to the country, and it's also costly actually to part of the creditors. So, and as I explained, in terms of incentives, we really need some pressure. So governments, the Chinese government very clearly, but also US and UK governments, among others, so the G7 in a way, have to make sure that the private sector engages, and they can use all kinds of moral suasion, prudential pressure, and so on. But what we have put forward is, on the positive side, to create, building up on the Brady bond restructuring experience, a credit facility, a guarantee facility that would provide credit enhancement to newly issued debt that would be swapped against a significant haircut against the old debt. And the old debt would involve both bonds, but also other forms of credit, so bank loans and so on. And so we need this combination of positive and negative incentives. And now one can say, well, but what you're saying is, too ambitious, but such a credit facility could actually be set up fairly quickly. What matters is the political will. And the important point is that, as I said, Sri Lanka is really the canary in the coal mine. And as Professor Buchheit mentioned, he said historians will look back at the Sri Lankan debt restructuring as the first major one in a long series of debt restructurings following this COVID crisis. And this is why it's also so important to get it right. Of course, it's so important for the people of Sri Lanka to get it right and to get it right quickly. But this is there will be many more countries which will face similar situations with with different reasons, different contexts, but ultimately they will face very similar situations. And so there should be really effort from the G7, from the G20, from the IMF and the World Bank, and indeed the private creditors to find a solution that works for Sri Lanka, but that also works for other countries, because what, you know, this will be in a way a playbook. It's incredibly important to really get it right, because Sri Lanka cannot afford many years of hanging in the loops, because there was a lot of discussion already about, the need to create favorable investment conditions so that private capital will come in. The reality is that if the sovereign is bankrupt, no fresh capital will come in. Nothing will happen. So Sri Lanka absolutely cannot afford to have this kind of hang in the loops and not be able to move anywhere. And of course, I know it's also a very difficult political situation, but we need to get this right. Thank you.
Okay. Professor, there's school. We are yet to determine how much of our debt will be restructured. That's a question mark. You mentioned about 39 billion overall. There is some estimate that we might go to about 12 billion. As a country, what would be your advice, and pick up the more tougher ones? That's first question. And the other is, in terms of, since the announcement of the suspension, nearly 2 months, given the race against time, you think Sri Lanka can really come up with a unique debt restructuring, given that we also need cash for follow-up activities?
Yeah, well, absolutely, time is of the essence. And when we talk about debt restructuring, of course, we also need to talk about other measures. I mean, Sri Lanka is really moving very quickly, unfortunately, towards a humanitarian crisis. I mean, food and energy prices are such that many people just can't afford. And indeed, there are shortages. So there also needs to be efforts of providing new capital, but of course, private capital is closed off now. I mean, no one will provide any private capital, and it's important that that Sri Lanka quickly tries to seek an arrangement with the IMF, and the IMF, of course, has a critical role to play in debt restructuring. The IMF's debt sustainability analysis is a critical element. And so I can't give you the number of the haircut because I have not seen, the full statistics. And as Professor Buchheit mentioned, one of the critical issues, if not the most critical issue, is that there is a lack of transparency, really. There needs to be full transparency regarding the debt that is owed to all creditor groups. And indeed, there needs to be transparency on the conditions. And that's, of course, where also the discussions with China are difficult, because there is very little transparency around that. And the IMF needs to make a sober debt sustainability analysis. And one issue that I have been, one point I have been trying to make is that the IMF's debt sustainability analysis really needs to take properly into account also issues like climate risk and critical investment needs in climate adaptation, for example, but also critical expenditures on health, education, and so on, because we cannot say, okay, these are issues that have to be expenditures that have to be cut. These are absolutely critical spending issues. And so we need a reformed debt restructuring, debt sustainability analysis from the fund that will take into account climate sustainability considerations. And only with such a comprehensive assessment can we really come to a credible assessment of how comprehensive a debt restructuring Sri Lanka needs. And of course, also Sri Lanka needs to commit to going forward transparency around its public debt, it needs to commit also to all kinds of reforms that will make the economy more sustainable, and so it's not an easy process, but it's absolutely critical that this happens very soon, because, as I said, every month that this is not moving forward will be a lost month for Sri Lanka, and the people will suffer.
Thank you. Thank you. I'd like to put this question to the panel. I mean, I know there's a race to conclude the debt restructuring, the debt analysis. Also, there's so much talk about bridging finance, which is very critical. What should be the sort of signpost to Sri Lanka? Could we be tempted to get these bridging finance at a more expensive cost going forward, given the default situation and the country's challenges? I mean, how should Sri Lanka manage that? That I think it's going to happen in the next 3 months or so. What should be the checklist for when countries going after bridging finance? Eran, also, I'd like you to sort of give your perspective, and maybe Professor as well, and Theagaraja from a private sector perspective.
I think you can't take any single thing on its own. So we need the IMF agreement. We need the debt restructuring running parallel. We will need to get bridging finance largely for social welfare protection, because you can't have instability on the streets and then think that you could push through a reform program. That will just not happen. And then, of course, there are lots of midterm reforms that will have to be undertaken. So I think we are at the moment is that the government is in discussion with the IMF, and they're basically, I think the discussion is somewhere on trying to figure out what are the structural reforms, you see, that could be agreed, because the staff level agreement would have to encompass that, right? And then they have to work out the baseline for debt sustainability, because the IMF will have to be satisfied that this is the baseline for debt sustainability. And meanwhile, the government of Sri Lanka and the central bank will be, I'm sure it's working that out at the moment, you see, because it's after that only that we could then start looking at some of the specifics. So clearly, the senior debtors are there and they'll have to be met. And we have then the Paris Club countries, OECD and Japan. We have to have India and China on board. India and China has to be on board. And obviously, it will have to be equal treatment for everyone. We could look at the principles of the G20, basically on the common framework, or we can discuss that separately with these countries, and we need to get them on board. We need them and they need us. We need them and they need us. So everybody will have to come in to some, common agreement on this. I know we are in effects, right? But it's not only us who are in effects. Others are also in effects. You say, so I think on the negotiations, I like the way Professor Ulrich, I think he put it, that there are two sides to this. I didn't want to use the word carrot and stick. I think that might be interpreted wrong by us if we say that, but there are two sides to this. Maybe I share something in common with Professor Ulrich. That's a School of Oriental and African Studies. I was there for years there as well. So I think we have to certainly look at that. We are on the reforms. We have to go for fiscal consolidation. We started it in the 2015-19 period. In 60 years, 2 of the years in which we had a primary surplus was in 2017 and 2018. All that got reversed, unfortunately. We have to get there. That will be painful. But that program was based more on revenue increases, but it is given that we will also have to go for a cost reform program. We will have to look at things which politicians have not been talking about, like Sri Lanka's defense expenditures are an example. We'll have to look at actually looking at our expenditures and getting it down. We have to be realistic. We need to bring the budget deficit down, right? And we will have to commit into that. The exchange rate policy, monetary policy, I think it's more or less, some movements have been made on that. And I think that should give confidence to the IMF and so forth. So I think we are somewhere in the early stages of this. And I think if we move on that, then those who are partners on the debt, right, will get more confidence that they are dealing with a country that is serious about its reform program. And I'm speaking as a member of the opposition in Sri Lanka, because we want to support the government to basically pursue the right strategy, which we pursued in the earlier period, and they made a mess of it over the last few years that has got us into this problem. And therefore, we can't do politics for the sake of politics. We just need to have the right policies. And both sides need to agree on that. And as a member of the opposition, I'm saying they need to take the hard decisions, which will be supported by us. Private creditors, commercial debt, I know there are problems there, but private creditors also need to remember that we must not make Sri Lanka a serial defaulter. This has the first time it has happened. We need to make sure that everybody gets together and we tackle this the first time round rather than leave it later. I'm sure there are lots of other ideas, and I got a couple of ideas while listening to the others, and there are lots of other ideas that Sri Lanka has a lot to offer. You see, also in terms of partnerships and assets and so forth, because normally we look at exports, tourism, remittances coming in. I think once we get the IMF agreement going and we start reversing out the program, the rating agencies will probably look more favorably, and then we could probably look at more seriously that our way forward is really not debt, it's investment, and we need to be really creating the climate and moving in that direction.
Okay, thank you. Rajendra, any inputs from you?
Yeah, 3 points. The first thing is, as Eran said, there is no quick fix for this, right? So in terms of bridging, what the markets are shut out, probably one quick fix is for the government with the Ministry of Finance to negotiate with some of the friendly multilaterals where there are undrawn existing lines. I think that process has already started to see whether there could be unrestricted use of proceeds of some of those undrawn lines, where the approval has already been obtained for these emergency purposes. That's probably one solution. The second thing is, while we look at a debt restructure, I think there is a very competent pool of advisors advising the government along with the governor and the president secretary. They should be given the independence and the confidence to continue that process without interference. I think that is important. And the third thing I'd like to pick on what I think it was Professor Yoshino and in particular Ulrich brought up, this whole framework about climate change and climate risk. Prof, I think if I'm not mistaken, a few months ago, the Commonwealth Secretariat through the Stimson Institute has given a commitment with the government of Sri Lanka to already start a climate risk assessment process. So I think that is already put into place. And I think this is a good opportunity for the findings of that to be combined with any sort of restructuring program, point one. And secondly, yes, while we are currently, as many of you have pointed out, Sri Lanka is today viewed as credit poor because we have essentially defaulted and we are shut out of the markets. But as Prof Yoshino said, we have a balance sheet. Beyond the rupees and cents of this balance sheet, we have something called nature. We have an ocean or the rights of an ocean which is supposed to be 8 times that of our land mass. And I think from land degradation and green, I think we are probably the best track record in South Asia. Now, here is an opportunity I think we have to convert a credit poor story into a nature-rich story. And I think, as you quite rightly articulated, about the various institutions out there in the world who are willing to provide not just direct capital, but also credit enhancement tools. I think this is the opportunity for us to try and look at things like I think they call it nature-linked or climate-linked trust instruments. I think IMF has already done that framework to look at that, as well as the possibility of a debt for nature swap. It won't address the entire 12 billion, but at least for a start, you may be able to raise a couple of billion to help in this process as we engage the restructuring process, because that has to couple with the overall classic conventional process. And this is the opportunity for Sri Lanka to tap a new breed of investors who have not been tapped before. And in this juncture, when we are really at the pitch in terms of a rating, this is the opportunity of converting that story into a nature-friendly story. So these are the 3 points I'd like to make.
Okay, thank you. Just want to bring this conversation into this asset sale. I think Dr. Jain mentioned about it. I think Ramakrishna also. I mean, we are coming from 2 years of basically not much asset sales. There have been a regime which said no to privatization. Maybe how can we get this right? Maybe on even fast track. What should be the key challenges in terms of being addressed in that process? Because that's another. There are challenges for tourism right now. There's challenges for remittances, but asset sale is contemplated as maybe a quick route. But how to get it right and transparently? I'd like some thoughts from the panel.
I'd like to contribute here. So the important thing is that for the asset sale, you need really international competency. So I'm not familiar with the competency that you have, but there are very good investment banks. They understand the asset valuation. They are convincing to the investors. They can come and play and advise very appropriately how to assemble this. So in addition to what Mr. Theagaraja said, you have enormous resources. Your positioning is very strategic. You are neighbor to a very large economy and large population. The tourism sector, which is seeing a downturn, should not be. So in terms of asset sale, if you were to consider the linkage of some of your strengths as a nation, tourism, and the assets in that area, I think there could be the only reason you would create the asset sale is to get enough liquidity. It's like the oxygen in short term to survive. And that's it. It's not like a political solution. It is a survival that you ought to look at. And one of the best things that can happen is when you would take the step, the investors, the private investors will come. They'll see the enormous capability that Sri Lanka has, the possibilities that exist. And then with that confidence, the private investors will come. So people such as funds, like my fund, would want to examine. I've not been to Sri Lanka in a long time. When I see the assets again, it'll pique my interest. I would want to bring our dollars here in your beautiful nation.
Thank you.
One more about asset sales.
Yes.
I think asset sales sounds like everything has been replaced, but that is not doing very well. In case of Japan Railway used to be under government. It has been privatized. However, employees are still working at the same station and running train. But the wage rate has to be based on productivity and so on. Everything has been changed. However, the business is keep on going. And top management has been replaced. So I think those kind of asset sales are important. And also, gradually, those assets have been sold. It was not sold 100%. At the beginning, 1/3 of those stocks has been sold to the market. Then 1/3 and next step. And lastly, I think multilateral institutions has to raise money because they can borrow money much cheaper than Sri Lanka can borrow now. So I think same amount money should be I should buy the IMF bond or ADB bond. That's all. Thank you.
Thank you. Excellent. Professor Mr. Ramakrishnan, well, just to, you did bring some insights in terms of, but I know given India's close ties, what do you think in terms of, there is always some resistance when some Indian companies come into or express interest on some of the Sri Lankan assets, just like China. Chinese firms want to express interest. Just kind of want to sort of share some insights.
Yeah, I'm not saying necessarily it should be Indian investment. It could be any other country's investment also. What I would emphasize is if this public-private partnership should be the focus for, selling the infrastructure assets that Sri Lanka has. It should not be raising further debt for infrastructure. Or if you have built any infrastructure based on a debt structure, convert that to an equity structure, give out annuities, give out tollways, etc. That could help restructure some amount of debt. And it could also attract further investment. More critically, it should be a direct investment. It should not be a debt. Okay, people might still have apprehensions that, okay, we earn revenue in Sri Lanka. How do we take out the revenue? Some mechanics have to be worked out where they are assured of the ability to remit, if not today, at least after 5 years or 8 years. If that sovereign assurance is given, I think some amount of investment can start flowing at the earliest. There are a lot of real estate which could be monetized, a lot of hotels which could be monetized, owned by the government or owned by the private, doesn't matter. What the country needs is dollar inflow at this point of time. So all avenues of bringing in dollars should be given urgency so that you work out the long-term solutions. These are what I thought.
Thank you. Professor Ulrich, I'd like to get your perspective here. You didn't touch much on the this option or this as one of the measures that Sri Lanka will have to look at in the transition. What would be your advice with regard to, given the fact that we have a kind of mixed legacy of attracting in terms of asset sale?
Yeah, I think I'm very skeptical, about selling state assets in the midst of a crisis. So, I mean, the risk is that Sri Lanka to get some foreign exchange will do a fire sale of stolen assets, and the critical point is that when discussing debt restructuring, this has to take into perspective the long-term development of the country. So this has to be embedded in a long-term development strategy. Getting some, short-term revenues from fire sales, if that, produces outcomes that will, in the long run, harm the country, is really not going to be a good decision. So I'm not in a position now to give specific recommendations on whatever state-owned assets could be liquidated and not. But we have seen, for example, in Europe, in the case of Greece, there's been this huge fire sale of assets. The Chinese, for example, have bought up a lot of infrastructure and so on. I very much doubt that this was in the long-term benefit of the Greek country. And so the key point is to think, of course, what were the key underlying factors contributing to the crisis, and there are many. So what were the problems and how can these be addressed? And what kind of investments going forward will help the country to prosper? And so, yeah, I would raise really a word of caution here.
Okay, fine. Eran, I'd like to bring you into this conversation. You mentioned about cost reduction reforms. I mean, we have tried restructuring, we have tried lots of formulas, but I think, but we are very reluctant to go the distance in terms of, VRSs to improve efficiency, various other measures. What would be your advice? Because in the event there is sort of consensual politics coming ahead. You said about reforms. How could we do the reforms, cost reduction reforms, without partial privatization or divestment?
Yeah, so I would say that some of it, we have to agree on the principles. One principle is, if we are importing, let's say oil, and as you know, Mangala, Samaraveer and I brought this 4 years ago for fuel. We brought a formula and said that the international price must be the price locally, rather than just subsidizing fuel, across the board. And then the high users, who are generally, right, those who are better off and well off in society, got the biggest subsidy, rather than actually those at the lower end of the income scale. So the principle is, right, prices must reflect international prices. We must socially protect the poor and the vulnerable. There's no question about it. And as you can see, the international evidence today is that you can identify them, target them, and directly give them the benefit, rather than just give benefits and subsidies across to everybody. So that basic decision must be taken. We have to move in that direction. And if we take care of the poor and the vulnerable, people will understand why we have done it, rather than give the rich, right, the subsidy. A poor man who drives a motorcycle or three-wheeler, it's called in our part of the world, right, takes 10 basically liters of petrol. Somebody who drives a big vehicle, SUV or a big vehicle, takes 80, 90 liters. And you can imagine the subsidy that they are getting. So that's one principle, I would say, on price. Then state-owned enterprises. I have said this in Parliament 5 years ago as Minister. I gave the Sri Lankan Airlines a $1 for anybody who wants to buy it. Right? At that time, I was very unpopular politically. Today, everybody is saying what you did was correct in offering it, because the average person doesn't have a benefit from that. And why are they paying their taxes, right, when we can bring the private sector into that, right? And that could be run more commercially. And the government will play its role in taxing at the right time, the appropriate tax, so that, there's social justice. And also we encourage private businesses and a whole lot of state-owned enterprises. There are more than 350 state-owned enterprises. In fact, I've got them listed out as viable, and for maybe strategic reasons. Some have to be kept in government. Some of them, the others could be better run, with basically private investment and private sector management and so forth. I don't think defense is going to be a big issue, because I think we'll take an overall decision at this stage in the crisis that capital expenditures have to be held back, because the crisis is so big and it will be much more difficult to deal with the recurrent expenditures. So you're right that it's going to be tough, particularly on public sector reform. We'll have to have a longer term program, but I think we can get some agreement on actually freezing, even if there are no cuts. And I think we need to look at it realistically. I would like to just say some comment on this whole issue that came out on asset sales, right? We have been pushed to the wall. And when you are pushed to the wall, right, in a negotiation, you generally tend to get a bad deal, right? And it's not that we are not aware of it, right? But we also have, right, lots of assets in this country, very good assets, as the professor mentioned, right? And there are assets that nobody has even been talking about. So I'm not into this whole idea of, real estate sales. But if people are going to participate in businesses, I think we should create the climate and open the doors for people to actually come. And if they're participating in businesses which are going to generate revenues, right, and also bring in technology and know-how, we should be open to that, and we should make it very friendly atmosphere in actually doing that. Then talking about SOE reforms, direct foreign investment, we have natural resources in our country. These are unexploited, right? And we have done a lot of work over the past 10-year period in actually understanding it. Our sea mass is more than 3 times the land mass of this small island. And we have resources there. We have the data for it as well. Right? So there are things that we can go about doing intelligently in the long-term interest of the country, not in the short term, in the long-term interest of the country. And I think the crisis must push the government to really thinking about some of these long-term decisions and reforms, which we were not able to push them in the earlier period because everybody was just comfortable. But now everybody has to rethink. And I think there are really some very good opportunities there. I'm not going to spell them out here. I've been talking with the natural resource people. The data is there, lots of international interest in it, already signaled. Governments have moved slowly because there's a lot of work that had to be done. Data is there, but now it's more to do with structures, it's more to do with agreements. And these are areas in which there's a lot of international expertise and practice, and we can gain from it.
Okay, thank you. Just a follow-up question to Eran, to you. I mean, Professor Ulrich mentioned about the need to ensure transparency in the debt restructuring process. Are you happy with some of the steps already taken, and what is the opposition doing to ensure that the whole process is fair and transparent?
I think it's a fair point that, on transparency, there's always room to improve. We must say that we ourselves are not happy with transparency. We have been extremely critical since the new president and the new government came into office, based on the information we had, even though all the data was not available. And we have been proven right because we predicted that we are getting into this disaster. Right? But even now, I think we are struggling a little bit because even on the debt numbers and things like that, we are struggling. I mean, I have most of these numbers in Sri Lankan rupees. You see, whether it's a multilateral debt or the bilateral debt, the private debt, and so forth and so on. Right? But we need it not only in rupees, because as you know, exchange rates have varied a lot. So we need to understand it actually in foreign currency itself, in dollars and pounds and so forth and so on. And we also need to be transparent because governments play their tricks, right? About, giving guarantees and partial guarantees, and these may be contingent liabilities, but we really need to know the truth, you see. And if we have to, that's why I said be very transparent, we have to play transparently, but we also have lots of positives, right? That we could position, right? For those who are going to deal with us and actually be a fair deal, both for the lender and the investor, and also for the country. So I think still there is much to be done. I would just say this, that the government has started in the direction of moving out the officials who are not transparent and who really ruined this country, right? They have been moved out. They were not the most fit and proper people to have occupied those positions. And that's because the checks and balances that were there to actually check whether somebody was fit and proper were actually removed by a constitutional amendment. Yesterday, I was in the party leaders meeting with the Prime Minister, and we have urged them to bring those checks and balances back, because if they're all brought back, that will also strengthen the hand of government in dealing with the economic situation.
Fine, thank you. Rajendra, just I want a reaction from you for Professor Naoyuki's mention about, the Japan's debt dynamics of entirely owned by locals. I mean, I know, is that something that we can look at going forward, reducing overall foreign borrowing, or is it just it's not going to happen in Sri Lanka in the next?
Certainly, it is a possibility, but it is not something which will happen overnight. And also, Nisthar, I'm sure Professor will validate this. I don't think Japan built this framework overnight. It built it over time. And I think it works on a simple premise that before you invest, you save enough to have enough money to invest. I think that has been Japan's success. Thus, domestic savings has been built to a level where they were able to go out and borrow internationally and invest in their infrastructure and their economy, but through savings. So it starts with savings and not through borrowing. But for that to happen, I think, given where we are today, I think we need to, it will take a bit of time, but I think now that we have come to a relatively all-time low, this is the time, I think, while policy reforms take place, this is the time also with the right sort of communication to the local citizenry of the importance of where we have failed. And I think for the next generation to realize the importance of domestic saving, I think if that message keeps on going, I think we will be in the right track.
Okay. Professor Ulrich and Professor Naoyuki, you have some comments to make?
Yeah, I basically wanted to very much endorse what Eran said, both about the importance of having greater transparency and indeed also the points he made about restructuring of the public sector and so on. I mean, this has to be embedded, or everything has to be embedded in a long-term developmental strategy, which very importantly really has to take social considerations into account and also has to account for critical investment needs in climate resilience and so on, because this is also something that is undermining Sri Lanka's future prosperity if these investments are not undertaken. So there should be an open discussion around privatizing state-owned enterprises, reforming them, but not because Sri Lanka needs cash right now, but because Sri Lanka needs a discussion around how it can adjust its economic model in a way that will be, delivering social welfare and wealth for the people. So because whatever amounts can be raised in the short term through fire sales of public infrastructure, these are not going to solve the problem. These considerations should not be made just because of the current debt crisis, but really having this strategic long-term thinking is important.
Okay, thank you, Professor. Professor Naoyuki. Yes.
I have two comments. Fire sales are not good, but it is very important to have efficient management of SOEs. The improvement of the efficiency is very important. Then it could be possible to transfer to asset management company and then gradually privatize it in 5-10 years. So, but the efficiency has to be improved. Second one is, how did we in Japan created domestic savings? The samurai night class period, we had no savings rate. Then 1878, at that time, finance minister thought we need domestic savings. Then he went to each primary school. Then all the children started to have booklet. And they started to save 1 penny every month. And that created a savings mind to Japan. So I think those kind of gradual and grassroots savings mind should be created in Sri Lanka. Thank you.
Thank you. Thank you very much to all the panelists. I'm sure Dinesh will have few more questions, both on some of the topics that you've spoken about. Thank you very much for being very frank. Lots of ideas were shared, and I'm sure there will more continuous engagement on the part of Dinesh. Over to you, Arun, to take the second stage.
Thank you. Thank you very much, Nisthar. We appreciate your having been handling the first part up until now. As was mentioned, we would have Dinesh Weerakkody, the past chairman of the International Chamber of Commerce Sri Lanka and now vice chairman of the Sri Lanka Institute of Directors, taking on. In particular, I would like to mention that while Nisthar was conducting the first portion of this panel discussion, there were ideas and thoughts, even questions that were forthcoming from those who were viewers on the platforms that I've already mentioned, the Facebook platform. So some of those questions from our viewers will be taken on in this next phase of the discussion as I hand the proceedings over to Mr. Dinesh Weerakkody.
Good evening, everyone. Thank you, Arun. Arun, you can hear me?
Yes.
Thank you. Eran, this question is to you. Somebody says some of the answers were at 30,000 feet. And this particular question is directed at you. Somebody wants to know, how do you get China, India, and Japan to agree to the same terms?
Yeah, I will just say it like this, that this is not only about debt restructuring. The economy, the social and political are all tied together, right? And there is a certain context which I won't, completely go into. There's a certain context, and the government is aware of the context. We've had very long-standing relationships with China, but we have had a cultural tie-up with India going back centuries, right? And then we know what's happening in the world around us. We know about the geopolitics of the region as well as what's happening in the world. And therefore, I think we have to have discussions, right, at every level, right? Not only at the level of the technical, but at the overall level. And I think that these friends of ours, right, will do their best, because they will want to see Sri Lanka succeed, and they will want to see that their interests are also safeguarded in that process, you see. So that's why I say that we have to talk to everybody, and we have to get everybody on the same page, because if we are to succeed, that principle of equal treatment, you see, will be very important.
Yeah, Eran, this is another question to you. Somebody wants to know, if you were the finance minister at this moment at time, would you do things differently?
If I was the finance minister, would I do things differently?
Yes.
No, not any different to what I have said, even though I'm sitting in the opposition as a former State Minister of Finance. We will support the government in taking the right decisions, and these are external negotiations that we have to do with other countries, and the opposition will be supporting the government, and we will do whatever we can, and I certainly will also do whatever we can in actually supporting the government.
Thank you, Eran. Thea, this question is to you. Somebody wants to know whether we have the capacity within the country, or whether we need to build international competence to deal with some of these challenges that we have.
I think we have a rich pool of local talent which can certainly be harnessed as long as there is no interference. But saying that, remember, Dinesh, we also have a plethora of Sri Lankans who have gone out and doing extremely well throughout the world. And the fact that we have the three eminent guys who are advising the government on the restructuring are all Sri Lankans of former Sri Lankan origin who are reached eminence outside. So it's a question of tapping them, inviting them, and harnessing. And I think we have the right sort of resource pool.
Okay. Manoj, this question is to you. Okay. Manoj, somebody wants to know, what are some of the new instruments that can be used to engage the private creditors?
So the biggest engagement of private creditor is to understand what is it that you have. So this whole, I apologize in advance to have said this, but this is a misnomer to start a conversation of debt restructure, which connotes as I'm not going to fulfill my obligation to pay as my liabilities. So what you need to say, IMF's engagement as a backer who brings parties, the creditors together to intervene, so that whosoever takes a haircut, whether it's private parties or the others, they can engage in. And then to participate as, let's say, if I was to come in, I would want to know, because the sovereign guarantee means less to me what it was, let's say, compared to last year. What other collateral, what other guarantees are you going to give? How, if let's say you were not to fulfill your obligation, what asset can I take a control of? So when those things are upfront, so I love the way Professor Naoyuki said that fire sales are a bad idea. It's saying that if someone has a heart attack, giving them a oxygen mask because it can put a cut in their cheek is a bad idea. No, it's not, because right now you've got to make sure that in a very short term, you have adequate liquidity to pass over so that when the help arrives, you can make your long-term plans. So lots of ideas are for long-term, but to bring investors in short-term to provide that liquidity, it's a must to talk about asset sale, to talk about discounts, to talk about collateral. So that knowledge, as Mr. Wickramarathne was saying, your country has a lot to offer. Lots of your jewels are not known. How do you surface them up? How do you bring them and say, make it attractive? So that is a job of some very competent people who can assemble the information to be presented to investors looking at your country with jaw dropping.
Okay, Manoj, this is another question too. It's a fairly clinical question. The question says, how do you manage the holding out behavior of the international creditors?
How do you
manage the holding out behavior? I think Professor Lee, referred to that earlier.
I'm sorry, I don't understand the question.
Manoj, I think this is to do with collective action clauses and the majority bondholders. For the minority guys, if they hold on to it, how do you manage them?
Sir, the thing is, this is not just right now. You never get what you deserve. You get only what you negotiate. So it's a question of negotiation, putting competent people both on the minority side and the majority who would negotiate. When IMF brings all these minority to the table, then the capability to negotiate is out of the window. And that's the biggest strength that you will have, because they will become kind of a guarantor on your behalf and ruling out all the other issues that you may have. And IMF's ability to then, on your behalf, to negotiate with the creditors is super. I've seen them negotiate, and when they show up, your problems can be solved relatively quickly. But to engage with them, you have to address what is their specific interest. They're not coming to the table without any cost. What interest of theirs are you willing to solve? What interest of theirs, along with the short-term issues of your liquidity, have you addressed?
Thea, this question is to you. It says, given the pressure on the LKR debt, what are some of the options for the government?
As I articulated slightly before during Nisthar session, I personally feel that there is an opportunity to replace some of the shorter term debt, the domestic debt, and issue longer term bonds, even up to 25, 30 years, Dinesh. And I think along with IMF, I think working with the likes of ADB, there could be some credit enhancing instruments which could backstop that. They have the technical expertise, and by doing that, we can make sure that the short-term liquidity could also be created by going back to the central bank, but by taking some of these the illiquid stuff from the banks, the system, into a different structure.
Okay, Professor Ulrich, this question is for you. Can you hear us? Yeah.
Yes.
The question says, what are some of the learnings from countries like Greece and India, Iceland and Ireland in managing the pain for the poor?
Well, I mean, first of all, I think it's absolutely critical that it's not the most vulnerable that suffer the consequences of a debt restructuring. Having, as Eran mentioned, having political instability certainly will not help, recovery from such a debt restructuring. And if people don't have enough to eat, if they don't have enough energy and so on, and the social situation is terrible, then this will also create social instability. So that's one problem. But also, of course, it will undermine confidence in the recovery. So making sure that appropriate social spending is held up, that investment in education, in health, and so on, which is also absolutely critical for the long-term success of the economy, that this is not cut, is important. And it's clear that, and it's been said, you don't enter into such a crisis, if there were no underlying structural problems. So these structural problems need to be addressed. But the experience that we've had, for example, in Greece and other European countries that face some very austere social policies, is that this is a kind of self-defeating strategy. So you need to address the real structural issues, and cutting social spending, which is sometimes easier than undertaking some of the hard structural reforms, is not going to be the problem.
Thank you. Manoj, there's a question for you again. The question says, how does Sri Lanka win back the confidence of the international capital markets through the debt restructuring process?
So, see, again, I'm not much of as a distressed investor, distressed asset investor, I'm not much of a believer of the debt restructuring, because I look at this with greed, because I would want to get some assets very cheap. So that's the reality. But in doing so, in providing that short-term liquidity, what you are doing is you're also exposing the international investor class to come into your nation, because you have, again, I'll repeat myself, what Mr. Wickramarathne said, you have assets. You're a small country, relatively unknown outside of the tourism. And if you were to start exposing the possibilities, let's say your oceans, what your natural surroundings can offer, it'll give the confidence. Plus, one of the biggest thing that, so I got educated outside of India. Now I live in Singapore, and I have come across very affluent, extremely competent and successful Sri Lankan diaspora globally. This is the time, I think it was said earlier also, to reach out to them, to create instruments for them that they will back up some of your short-term instruments, convert them, and when they start showing up, there's enough wealth, I believe, in your diaspora globally, despite small in number, but the asset sides are relatively larger. And I'm not speaking with any facts, but only my intuition or any feelings around this. So they need to be tapped. And when they start showing up, international investors come in. They would bring. So there is already a few Sri Lankans in Singapore. They've started approaching us. What can we do together to support them, to come along with them? And that's a role your diaspora ought to play to build confidence in international investors.
Thank you. Professor Yoshino, can you hear us?
Yes, I can hear you.
Yeah, there's a question for you here. Somebody wants to know, can Sri Lanka sell some of the bilateral debt to friendly nations? Are there examples?
Can you repeat me? Excuse me?
Yeah. Can Sri Lanka sell some of the bilateral debt?
Oh, bilateral, okay, yeah.
To friendly nations, are there examples?
Oh, I see. I think that bilateral debt is a negotiation between the two. But if it's a problem, that can be frozen, and then IMF or other international organization can hold for a while. So I think that would be the way. Yeah.
Okay. Professor Ulrich, any comment from you?
Yeah, I mean, just on the last one. So I think one issue that's really important is that there is equal treatment of creditors. So what we should not be seeing is taxpayers' money from bilaterals, basically taking kind of bailing out the private sector. Yeah? So there needs to be equal treatment of bilateral and private creditors. And I would like to follow up on the question about the private sector or private creditors taking a haircut. And Manoj said he doesn't really believe in debt restructurings. Well, the issue is that both creditors and debtors have a responsibility. Yeah? So when it comes to debt restructurings, the blame is always put on the creditors, on the debtors. And of course, I think we can all agree that a lot of mistakes have been made by the Sri Lankan government. But we have also seen a lot of private creditors lending money at very high returns to Sri Lanka. And they also have a responsibility. And there is a narrative often coming from the private sector that debt restructuring is actually really terrible for a country. Government should abstain from that. They should do everything to avoid a debt restructuring. Well, it's not a nice situation to be in, but there comes a point where debt restructuring is inevitable. And Sri Lanka certainly has reached that point. It has reached that point already. It had reached that point already before. And indeed, if earlier action had been taken to address the debt problem, then much of the hardship could have been avoided. And the purpose of a debt restructuring is to basically clean the balance sheet. Yeah? It's the realization that a government can't really continue servicing its debt without creating undue hardship on its population. And the goal of a debt restructuring is that after the debt restructuring, the public finances will be healthy again. And so this also means that the debt haircut needs to be sizable enough. And of course, as mentioned, debt restructuring needs to be part of a broader structural reform so that really there's a new momentum for growth and development. And the empirical evidence is very clear. Countries that postpone debt restructuring are suffering much more. Countries that act quickly on that will come out much better, and their growth will resume. And very importantly, markets will return. Yeah. So this notion that if countries restructure their debt, they will be cut off from private capital markets for centuries is just not true. You know, the most extreme example, and this is certainly not the example that Sri Lanka wants to follow, but Argentina, which has been a serial defaulter, not that long ago was actually able to issue 100-year sovereign bonds, which were massively oversubscribed. Yeah. So even in the case of Argentina, private investors bought 100-year sovereign bonds. I mean, which of course now in the meantime, Argentina has defaulted again. So that's why I'm saying this is not the example to follow. But the goal of debt restructuring is to really clean the balance sheet and enable the country, meaning both the government and the private sector, which of course is very important, to invest anew so that there will be new growth, new development. And if that is not happening, you know, the situation will just drag on and there won't be any return to growth.
Thank you. Thank you.
One thing, so that it's fair and square on your part. So I would not want to restructure my debt because then I'm not want to lose my money. There are other methods, for example, instead of the debt itself, can you convert it into equity of some sorts? So there are certain assets that you can do. So there are lots of things that can be structured technically. Otherwise, this debt restructuring connotes as if people who've trusted, they've come in. The reason the international investors came in with the high debt is because they're looking risk-adjusted high returns. The country's risk were higher. Of course, they got to pay higher interest rate. It's not private investors like me have a job to give my investors the best return. And I cannot take that risk unless I'm adjusting it for the return. So,
yeah, but the fact is that you're also getting the return. And the empirical evidence is actually very much that even with a debt restructuring, the returns usually are positive. Yeah, so
but will not come then. So that's a different for private investors.
So let me park that there because otherwise I can't finish all these questions. Eran, this is a bit of a painful question. Somebody says accountability of those responsible for the economic mayhem is a must. But is there a political appetite going forward?
Sorry, didn't hear you completely.
Yeah. No, the question says accountability of those responsible for the economic mayhem is a must. But is there political appetite going forward?
Yeah, important question, particularly on the reforms, you see, because we have got into this mess because not just only because of what happened in the last 2.5 years, that Sri Lanka has been a twin deficit country for decades. So we've had a balance of payments deficit and we have also had a budget deficit. So the budget deficit was the thing that we were bringing down and we were going to 3.5%. We got it down to about 5, you see, and going in that direction. Now we are in the third year and I'm hoping that it won't be double figures. It was double figures the last 2 years and I'm hoping it won't be double figures this year, you see. So appetite for reform in the past, not demonstrated, right? Insufficiently demonstrated. So you need fiscal consolidation, you need cost, and you will need to have the other reforms done too. But I think that there is no choice this time, you see, and therefore people will be open to the idea that some of this has to be done and it's in their long-term interest, right? And I think we have a responsibility to actually explain this to people that it's in their long-term interest. I will just make a quick comment on Dr. Manoj Jain's thing, that, that there can be, debt being swapped for equity and other instruments and things like that. These are all possibilities, because one of the things that you will have when you look at the private debt, because after you get through the multilaterals and the bilaterals, right, the seniors we will have to be paying, others we can bring them to the table and talk with them. But the private creditors, right, so we have the ISBs, the International Sovereign Bonds, and we have the Sri Lanka Development Bonds. SLDB is also held by Sri Lankans and Sri Lankan banks and so forth, you see. And we will have to look at ingenious ways, you see, ingenious ways, right? Because either these will have to be swapped for much longer terms, if you're looking from a cash flow point of view, but that doesn't have to be the only option. Other options could also be there. And I think Dr. Jain had a point, and I think we can look at that possibility, right? Even if you take the, one of the things that I'm very cautious about is a reform and a restructure can't create a bigger problem. You see, because then it doesn't become a reform and a restructure. It creates a bigger problem. We can't have an economic crisis develop into a banking crisis. No way. We're going to protect our banking system, you see, and that's going to be number one, right? And we are going to protect it. So in protecting it, some hard decisions will have to be taken, right? And some of these institutions will have to be recapitalized. So there will have to be, we'll have to look at instruments as he's suggesting, and there are ways and means, and I'm sure that if they are properly positioned, that they will also look attractive, to investors.
Okay. Eran, there was a follow-up question here. Someone wants to know whether there is an opportunity for all the political parties to work together to create an economic council of sorts to resolve this crisis, where one group keeps complaining and criticizing, and that actually doesn't really help the cause.
Yeah, so certainly, because the problem on the political front has been that Sri Lanka, apart from the economic crisis, had a huge protest going across the country, calling for change, right? And we, as a party, represent that movement in Parliament. So we are giving them that recognition because Sri Lanka is wedded to democracy. We want to keep it as a democratic country, and we want to make sure that those movements are also represented in Parliament, because always when there's instability, non-democratic forces also try to raise their head, and we're very conscious of that, and all these forces must be represented in Parliament. So we have not come into government because we haven't seen sufficient change by the people who are responsible, who created the problem. And that's the reason that we haven't come into government. So we will remain in opposition, right? And we will look at ways in, as I said, supporting the government, and certainly in the area of dialogue and discussion and all, we are very open to it.
Okay. Professor Ulrich, any advice from your side?
Well, I'm not sure I have much advice on the specifics of the Sri Lankan processes, but yeah, I mean, I think what is critical is engagement with international partners. I mean, it was already mentioned, India and China are, of course, super critical stakeholders. I think it's also going to be important to really seek engagement with the G7 countries, because whether you like it or not, kind of international financial governance, nothing will happen without the US and also the Europeans, the same way that nothing will happen without China. It's going to be critical to really advance swiftly the discussions with the IMF and to convince the IMF of kind of a progressive approach to restructuring the debt and really setting out a clear way forward, because that's also what you need to get the private sector domestically, but also international investors engaged again in Sri Lanka. And we've been talking so much about gloomy issues, but the very fact is that Sri Lanka is such a rich country, I mean, with such great people and also great resources, also strategically located. So all the really all reasons why Sri Lanka should be prospering, and getting the international partners including, of course, the private creditors, to agree swiftly on a debt restructuring will be really important.
Okay. Thea, you can take this question. Somebody wants to know what are some of the options to create rupee liquidity and Forex liquidity in the local banking system, because the government has defaulted on the SLDBs and ISPs.
So again, currently on the SLDBs, I think we have around just under 2 billion. I think it's around 1.6 or 1.8 billion with about 8 to 10 banks. So I think one option which I believe they offered was on maturity to settle in rupees. Because I think one option which was given, I don't know how many have taken it and whether people have taken it. That's probably one option. The other option is, of course, is the extension as part of an overall restructuring process. But the third important thing is also to create a window as a part of an overall liquidity release to see whether you could create an instrument which can not only look at SLDBs, but also look at some of the short to medium term current debt into a longer term instrument, so that you can create that shorter term liquidity locally. Along with that, Dinesh, because I have to check out in a short, log out in a short while, I just want to make one point which I have made repeatedly in the last 6 months. You see, debt restructure is important. Along with debt restructure, the sustainability is important. But for the sustainability of the debt to be assessed by anybody, a proper viable economic revival plan has to come in. And unlike, I think we have made this mistake, Eran may collaborate or he may have his own comments on this, but I think we have probably failed in the past, at least in the past decade or so, to bring in accountability at the lawmaker level, at parliament. Maybe sometimes these signatures are signed off by 1 or 2 people who are delegated. And I think this is the opportunity in whatever we now get together as a revival plan, which we go and put forward, that we defend this in parliament, so that regardless of somebody who is there for the next 2 years, I think we need to look at a 5 to 10 year horizon, as the professor said. If there isn't collective accountability by the supreme lawmaking body, this will not work. So I think that's a very important point to make.
Okay. Thea, just take this final question and then you can leave. Actually, my final question is for the entire panel. The question says, given the painful challenge ahead for the people, what is your final advice to the government of Sri Lanka? Just take 1 minute and answer it, please.
I think
go first.
Okay, the answer for the government is, first of all, we are in very capable hands in terms of the advisory panel, and have faith in the regulatory, the treasury and the regulatory professionals who are there. Don't interfere with them. Support them and give them the thing to go ahead and do this negotiation. Any interference, I think, will distract attention at this moment.
Okay. Professor Yoshino?
Okay, thank you very much. My final word is, I think digital infrastructure will be very important for Sri Lanka, which can be supporting education, remote education, health, and so on. So bring the private sector finance into those infrastructure investment. Infrastructure can create spillover effects that will become a future tax revenues. So I think bring private sector finance into infrastructure. Thank you.
Okay. Manoj?
So in short term, Sri Lanka can gain advantage from the international investors who have a consensus on one topic, that is the global warming, climate change. There is a lot of funds available globally to look at what's necessary for the planet Earth to survive. And Sri Lanka's strategic position can make a difference. So someone should work towards bringing those funds to create a green economy to tackle climate change, along with putting together a very strong, competent team of international bankers who can look at your assets categorized to get the short-term liquidity for Sri Lankans to live a somewhat normal life.
Thank you. Professor Ulrich?
Yeah, thank you. So debt restructuring is urgently needed, and it needs to be linked with a long-term vision and strategy for green and inclusive recovery. Sri Lanka is a highly climate vulnerable country, so there needs to be a clear strategy on how to climate-proof its infrastructure, make the economy fit for the coming decades. Yoshino-san mentioned digitization. So kind of all these long-term challenges need to be built into a recovery strategy that has to be social. Thank you.
Okay. Eran, you can have the last word.
I won't say anything on debt or economy. I might just say that when the finance minister went to the IMF, they said they're looking at basically sustainable debt. And then they said they're looking at sustainable political front in the country. So the question about accountability, right, is absolutely critical. There's a cry in the country that there are certain changes that need to be made. The 21st Amendment to Parliament is really about that change. It's talking about that change. It's talking about more accountability. It's talking about finance actually being the responsibility of Parliament. That's the fundamental principle why the executive makes decisions. Parliament can not be sidestepped, particularly on finance. They are raising a rupee, they are spending a rupee, and there has to be accountability. And then there are laws that have been there, including fiscal management acts that are in Parliament, being in the breach, you see. And I think that people have to be held responsible because, the rule of law is absolutely important. It's not only when somebody murders somebody, but when there are rules of law to do with social, political, and economic things, that people who have taken public office should be held responsible. So this whole accountability issue, I would say, and the 21st Amendment is really trying to address some of those issues. We shouldn't dilute it because change, as you know, and historical moments don't always come. They sometimes come in long cycles of maybe 30 years, 40 years. And Sri Lanka is at a juncture like that, and we need to make sure that we don't paper over it, but have the long-term vision and then make the short-term strategies fitting in with the long-term vision.
Yeah. So, Eran, on the subject of accountability, we should have another webinar to discuss that. Given the number of questions here. So, let's do that. Ramakrishna, you like to say anything before we conclude? Yeah.
Sorry, you have a fairly robust private sector business in Sri Lanka. Any idea they can come up with to bring in more short-term funds as well as long-term funds into the country?
Okay, thank you. Over to you, Arun.
Thank you very much to all of our panelists. We are going to have a quick rundown of the take-home points, and Talal, Rafi is poised and ready. But just before that, I would like to say thanks to our chief editor of the DailyFT, Nisthar Cassim, for having handled the first phase of this panel discussion. And indeed, say thank you very much to Professor Ulrich, who's joined us from London. Thank you also to Dr. Manoj Jain, as was mentioned, he's based in Singapore and he's with us. Thank you also, Mr. Ramakrishna in India. And Thea, you had a point that you wanted to conclude with. Is there a thought that you had? Finally, I saw your hand up, your electronic hand up. Would you want to add something before we?
Yeah, just to in response to Manoj Jain, just to say regarding the need to bring investors and come regarding nature climate friendliness, I believe already a proposal has been put forward to the government, and I think that there was a mandate given just before the change of government to actually bring in performance-linked trust instruments along with the debt for nature swap, linking both the marine spatial plan for the blue as well as on the green. I believe that's already there. It's probably up to the new Prime Minister and the government to maybe reactivate that conversation.
Okay, thanks very much, Thea. And also we would like to say thank you very much to the Honourable Member of Parliament, Mr. Eran Wickramarathne, for sharing his thoughts and his time with us over quite a number of hours now. Thank you. And from Japan, we have Professor Naoyuki Yoshino. Thank you very much also. Now, just before I invite Talal to do the take-home points, in conclusion, we have a very short message from the International Chamber of Commerce Sri Lanka. So we have that message, which will be broadcast, and immediately after that, Talal, over to you.
The International Chamber of Commerce Sri Lanka is the national office of the Paris-based business organization. The ICC comprises of membership of 45 million members in 130 countries. Trade facilitation, export and import and cross-border trade and issues relating to freight forwarding and many other matters of importance are addressed by the ICC. ICC Sri Lanka works through several committees to debate, discuss and suggest solutions on subjects related to the mandate of the Chamber. Each of these commissions are led by professionals in the committee, with many committees functioning. ICC includes a membership committee, International Relations Committee, Policy and Advocacy Committee, Training and Development Committee, Banking Committee. ICC is the sole authorized guaranteeing agency for ATIA. It's an internationally accepted customs document which enables duty-free and tax-free temporary importation of items as commercial samples. The ATIA reduces costs and red tape. The ICC is also known for its popular publications invaluable for bankers, lawyers, arbitrators and anyone involved in cross-border trade. Its members are provided with a member's privilege card which includes discounts with multiple retailers. ICC Sri Lanka's vision is to be the organization of choice to advance international trade and investment for businesses in Sri Lanka. ICC Sri Lanka's mission is to be the change agent in national policy formulation and implementation and facilitator of global businesses with Sri Lanka and disseminator of information on the development of business utilizing the services of ICC Paris while continuing to be a facilitator of dispute resolution. In addition, the ICC Sri Lanka organizes seminars, lectures, meetings with business leaders, and gives recognition to Sri Lankan businesses for outstanding achievements. ICC can play a special role in connecting business to the world and be a driving force for all Sri Lankan businesses.
Talal, Rafi, thank you.
Thank you, Aaron. Just to give the closing remarks and summarize the talks, it's been a very interesting thing, so very difficult to kind of summarize the whole thing. But just putting it in, it's like Sri Lanka is in a very crucial stage because what happens in Sri Lanka resonates outside. And this will be seen as an example because Sri Lanka is going to be the first post-COVID debt restructuring. And also, we're in the midst of an upcoming recession. I mean, it's also a time of quantitative easing globally, the US monetary policy tightening, so making it tougher for borrowing, and the Ukraine-Russia war. I mean, this has affected oil prices and food shortages because around 30% of the wheat globally comes from there. So since most of the developing countries are importers of food and fuel, this means a number of countries going into debt. So it's not just about Sri Lanka seeking debt relief, but there's also competition for Sri Lanka. So this kind of makes it a bit more complex. And lately, what we find is that the number of distinct creditors has also increased drastically. Like in the last decade, it's reached over 20, making the process extremely complex. And so we have 4 major types of creditors, or you can say 3. One is the bondholders, the private sector, institutional investors, and others. The others are the multilaterals, who usually, as Dr. Buchheit said, we do not usually restructure their debt because they are usually given at times when countries are in tough situations and their interest rates are very low and grace periods are quite long. So there it's mostly refinanced. And the other thing is the bilateral debt. One is the Paris Club. Here in Sri Lanka, the largest creditor is Japan out of the Paris Club, and out of the non-Paris Club, it's China. So as the professor was saying, there is a common framework, so which includes the Paris Club members and the non-Paris Club members. But unfortunately, Sri Lanka does not fall into it because it's usually for the low-income category, which Sri Lanka doesn't fall into. And also, the majority of Sri Lanka's creditors are the private sector ones. But there is a bit of a complication because the Chinese state-owned enterprises also come in as private enterprises. So that is hugely debatable. But as far as what Sri Lanka can do, one is be transparent, not only to the population, but to the creditors, so that each creditor knows what the other one is getting, not just within bilateral to countries, but also to the private creditors as well. So that will be one thing. The other thing is not to demonize the international creditors. I mean, this is a time when certain factions can take advantage. So it just like criticizing, demonizing international creditors, which just makes the whole process much more tougher. So there's a bit of a collective action needed, and also building confidence by emphasizing on sustainable development, like improving education, like mostly like not just improving, but also refocusing our education more towards STEM and other industries where we can, like what was discussed, more towards digitalization, and also the climate aspect of it. Because not just Europe currently leads when it comes to green bonds, but not just Europe, but even large companies like Google and all have issued green bonds. So this is another area where we can focus because we are what can you say? We have excess amount of solar, wind in this country. The other thing is also making use of our strategic location. I mean, we are next to a very rising global power, India. So making use of it. And as far as asset sales go, like Professor Ulrich said, we not just for the money that's needed urgently, but also for strategic reasons. Like, for example, if privatizing, probably like giving it to a investor from India or China, if it can open the state-owned enterprises to more investments or more clients, customers, these can be quite helpful. And in some cases, debt reprofiling also can be an option. But this is going to be a very tough period because a number of reforms are going to be needed, like tax increases. What we find is that in the mid-1990s in Sri Lanka, our tax to GDP ratio was 20%. Now it's come down to 8%. And if we can just get it back there, our whole budget deficit can be erased. So not just increasing taxes, but increasing the tax base. So that is one thing, reducing subsidies. These are not easy decisions, but as Dr. Shanta Theagaraja once said, instead of subsidies, can try to transfer the cash more to the poor and restructuring the SOE. So it's a very positive move about privatizing Sri Lankan Airlines. But at the same time, we also need to take the interests of ordinary citizens at the moment. I mean, there's a huge amount of belt tightening going on. So how much more they can take is also the question. So there has to be a sort of a balance between being fair to the creditors and also looking after the interests of the population. So one thing is, so the IMF would be a good partner here, needed. So just the government showing willingness to engage in an IMF program and starting the process itself brings in a lot of confidence and credibility to the whole restructuring process. And lastly, leaving on a positive note, just to build up confidence to face this, as was mentioned, Japan has the highest debt, but it has a number of other reasons. Also, most of its debt is in local currency. So, but also Sri Lanka, we must know that we can come out of this because this is the first time we've defaulted, and Argentina has defaulted 9 times and 3 times in this century alone. So many countries have gone through this. So it's all about like using this crisis to get the proper reforms. And if you can come out of this much stronger, that would be very helpful and useful. And when looking back, this crisis could be seen as a more of a positive. If we can get the correct reforms done and become a developed country in the coming decades. Thank you.